Hello, and welcome back to Explain the Charts, your go-to channel for detailed technical analysis. Today is November 7th, 2025, and we are diving into one of the most talked about stocks on the planet, Tesla, symbol Tesla. It has been a monumental week, with the headline news being the overwhelming shareholder approval of Elon Musk's massive new compensation package, potentially worth up to $1 trillion. This pay plan is tied to extremely ambitious goals for Tesla, including reaching an $8.5 trillion market cap and mass deployment of robotics and humanoid robots by 2035. The board argued this is essential to retain Musk and incentivize his long-term vision for AI and robotics. However, the news was met with significant market volatility. News reports indicated that while the stock fell sharply during Thursday's regular trading session, it saw a pop in after-hours trading once the preliminary results were announced. Other major developments from the shareholder meeting include talk of a potential AI chip partnership with Intel, which sent Intel's stock higher, and Musk's prediction that Optimus robots could one day end global poverty. The overall sentiment is a mix of extreme long-term optimism based on this vision and short-term concerns around corporate governance, share dilution, and a shaky broader tech market. So, let's turn to the charts to see how this dramatic news is shaping the price action and what we should be looking for next. Looking at the daily chart, we can see Tesla has had an incredibly volatile year. After hitting a 52-week high of over $488 in December of 2024, the stock saw a significant correction in the first quarter of 2025. It found a major bottom and established a key support level around the $214 to $222 zone in March and April. From that April low, the stock staged an impressive recovery, rallying over 70% to highs around $360 in May. However, it then experienced another sharp sell-off in early June, gapping down and falling all the way to $273. Since then, the price has been in a broad, choppy uptrend, eventually building momentum through September and early October. We can see a massive gap up on October 24th, where the stock jumped from a close of $213 to open above $244, a very powerful bullish signal. More recently, the price has been in a strong uptrend since finding support around the $410 level in early October. This brings us to the recent price action leading into this week's pivotal shareholder meeting. Now let's zoom in on the last month of price action to better understand the context of this week's news. We can see the stock rallied strongly from about $413 on October 10th to a recent high of $474 just a few days ago on November 3rd. This shows significant bullish momentum leading up to the vote. However, yesterday, November 6th, was a brutal day for the stock, consistent with news reports of a pre-vote sell-off. The stock opened high at nearly $462, but sold off throughout the day on extremely high volume, closing near its low at $445.91. That long red candle on massive volume indicates significant institutional selling and uncertainty. The low of that day, $435.09, has now become an absolutely critical short-term support level to watch. The market was clearly nervous, but the positive after-hours reaction to the vote suggests a potential sentiment shift. The question for today's session is whether the fear that drove yesterday's sell-off has been replaced by the optimism of the vote's outcome. Switching to the one-hour chart, we can see yesterday's volatility in greater detail. The trading session on November 6th was a clear downtrend, with sellers in control from the very first hour. The price broke down through several minor support levels before finding a temporary floor around that $435 mark in the late afternoon. That $435 level is the most important line in the sand for bulls in the short term. A break below that level on the hourly chart would signal that yesterday's selling pressure is continuing, despite the positive news. On the upside, immediate resistance sits at the consolidation area around $448 to $452, where the price tried to bounce yesterday before failing. Above that, the major hurdle will be reclaiming the pre-sell-off level around $460 to $462. Since we are recording before the U.S. market open, we'll be watching pre-market activity closely to see where the price opens in relation to these key hourly levels. The news reports of an after-hours pop to $453 suggest we could open right in the middle of this key battleground zone. For an even more granular view, let's look at the 15-minute chart from yesterday. Here we can pinpoint the moment of most intense selling, which occurred in the 2 hours after the market opened. The price plunged from $463 down to $452 between 1430 and 1500 hours Universal Time Coordinated. After that, the price chopped sideways before another leg down later in the session, establishing that critical low at $435. For day traders today, this chart provides the most immediate levels to watch at the open. Any move back above the $453 to $455 zone would be a short-term bullish sign, suggesting buyers are absorbing the news positively. Conversely, if the stock opens weak and starts testing the $440 area, it could be a warning sign that sellers are still in control, with yesterday's low of $435 being the ultimate test. Watching the volume at the open will be crucial. High volume on a move up would be bullish, while high volume on a move down would be bearish. Okay, let's pull back to the daily chart to synthesize everything and discuss potential scenarios. First, the bullish case. The argument here is that the approval of Musk's pay package removes a major uncertainty and reaffirms his commitment to Tesla's hypergrowth future in AI and robotics. Yesterday's sell-off could be viewed as a shakeout of weak hands before the positive news catalyst. In this scenario, we would expect the stock to open strong today and begin reclaiming yesterday's losses. A daily close back above the $460 resistance level would be a strong confirmation of this bullish view, putting the recent highs near $474 and the 52-week high of $488 back in play. I would assign this a 60% probability, reinforced if we see strong buying volume and positive sentiment in the broader Nasdaq. Now for the bearish case. Here, the market ignores the long-term vision and focuses on the immediate negatives: massive potential share dilution, ongoing governance concerns, and high valuation in a weak tech sector. Yesterday's high-volume sell-off is seen not as a shakeout, but as smart money distributing shares. In this scenario, the after-hours pop fizzles out at the open, and sellers resume control, pushing the price below the critical $435 support level. A break of $435 would open the door to a further decline, potentially targeting the support zone around $410 to $420. I see this as a 40% probability, and its likelihood would increase if the overall market continues to show weakness. To recap, the key price levels to watch are critical support at $435 and major resistance at $460. The price action between these two levels today will tell us a lot about which direction Tesla is headed next. Keep an eye on the opening print and the volume that accompanies it. And that concludes our analysis of Tesla for today. Remember, everything discussed in this video is for educational and informational purposes only. It should not be considered financial advice. Trading and investing involve significant risk, and you should always conduct your own research and consult with a qualified financial advisor before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.